Mr. Floyd, you may begin.
Thanks so much, and appreciate everybody dialing in and listening to the presentation. I'm excited to share the VOX royalty opportunity with you. Very quickly before we get into the presentation, please note the disclaimer and the disclaimer around forward-looking statements. For many of you may not be familiar with royalty companies. VOX Royalty Corp is what we call a royalty aggregator or buyer of what are third-party mining royalties. VOX Royalty Corp looks for royalties that have been created most of the time very long ago over mining assets. And when we purchase these royalties, we are purchasing a undiluted perpetuity interest typically in the revenue that's generated by that particular mining operation. There's a lot of benefits to owning a royalty company that VOX provides its investors when looking for commodity exposure. We're able to generate income that is undiluted in perpetuity without the risk of margin contraction, CapEx overruns, or dilution, frankly, from those events. And so when mining companies go and experience difficulties and have to raise capital and dilute their shareholders, the royalty is not diluted. It's a perpetuity interest in that portion of revenue. The benefit of this is we're never on the hook for further capital. So that first dollar in is the last dollar in, and then we have a perpetuity interest in this revenue. This allows our investors to gain exposure to mining operations with much fewer risks that are typically relevant or present within investing in a mining company, but while generating very similar upside. And so royalty companies, because of these key characteristics, have outperformed pretty much every commodity-based benchmark you can compare them to for the better part of really almost 2 decades now. Royalty companies outperform spot gold, they outperform spot commodities, they outperform the S&P, they outperform the GDX. So if you're looking for commodity exposure, royalty companies are the best risk-adjusted way to get that. There are 3 major royalty companies that have been around for a very long time now: Franco-Nevada, Wheaton Precious Metals, and Royal Gold. These companies have produced very significant returns for their shareholders and very significant alpha for a very long time. What's interesting to note is in their first 3 years as a publicly traded company is when these royalty companies experienced the most significant returns for their shareholders. VOX, having just gone public in May of last year, May of 2020, is right in the middle or right at the early stages of that curve. You may also be wondering, well, how do royalty companies perform in different commodity cycles? Royalty companies outperform essentially in every commodity cycle, whether that's bullish, bearish, or relatively neutral. Royalty companies have outperformed, and it's because of those characteristics that I mentioned earlier that it's this undiluted, typically perpetuity upside without the risk of capital calls, without the risk of margin contraction, that allow for royalty companies to outperform in typically any commodity cycle. So you may be wondering, what separates VOX from the other royalty companies that exist out there? First is VOX has been around since 2014. We went about building a business for the long term, just like you would in any other sector, around intellectual property, competitive advantages, a team that understands the mining technicalities and the inherent assets, and building a network around the world that helps us find these third-party royalties wherever they may be and understand them as well as anybody. VOX, since the start of 2019, has been the fastest growing royalty company on the planet, that's bar none. We've assembled a royalty portfolio that's closing on 50 royalties with 35 different operating partners, that's very precious metals weighted, that has very low geopolitical risk, with 80% of our royalty portfolio being in the Americas and Australia, and the deepest pipeline of acquisition opportunities of any royalty company out there. VOX Royalty Corp went public in May of last year. We raised approximately $14 million in that IPO. We have no debt and a very tight capital structure. In fact, when we went public, we had to forward split because we had been so tight with our capital structure and had developed so much value for our private shareholders. As I mentioned, we're precious metals weighted. We are a precious metals focused royalty company. That being said, when we find great royalties over other hard rock commodities, we bring those royalties into the portfolio for our investors at great value. We have very low geopolitical risk, and we have exponential growth in some of the key characteristics that matter for royalty companies, namely assets moving into the production stage. We went public with 2. We now stand at almost 5 production stage assets. We expect to end the year with more than 9 production stage assets. The team is very technically savvy. I founded the company back in 2014 with the premise that we would be the leader in terms of intellectual property competitive advantages and technical understanding of the mining assets that we're going to buy royalties over. We have a very deep technical team, 2 mining engineers and 2 geologists that have renowned experience around the world working for some of the most significant major companies in the mining space. We've also strategically located our team around the world to make sure that we're finding in front of as much deal flow on the royalty side of the business and the royalty acquisition side that we possibly can be, and that's working extremely well. The royalty portfolio, as mentioned, is very geographically diverse, but geographically diverse within very safe mining jurisdictions. Most of our royalties are either in Australia or the Americas. We selectively will look at royalties outside those jurisdictions when we believe the risk reward is still very much in our favor and where we have a very strong opinion on the quality of the asset. The portfolio is continuing to advance ahead of schedule. We are now approaching 50 different royalties with more than 35 different operating partners. We have an abundance of exploration royalties moving into development stage, and development stage moving into producing asset category. Now, producing asset category is significant because that's when revenue starts to get generated, and we are at an exponential stage in our revenue growth. Slide 10 is a quick overview of some of those assets that are coming up the production curve. We have a significant number of assets that, while we're not counting on being in production in the next year or 2, have a very significant chance of actually coming into that category of asset where they are very quick restarts or they are on care and maintenance presently. Those assets provide our investors with additional exposure to production and revenue, and we have one of the deepest portfolios in terms of assets that are moving from the development stage into the production stage, and then a number of assets that we believe will come into production, but that we're not currently forecasting to be in our production expectations. VOX Royalty Corp has been the fastest growing royalty company since 2019. We expect that growth to continue far into the future. The fact, though, is VOX Royalty Corp is also buying royalties at better value than pretty much anybody else in the royalty sector. So you might ask, how is that done? We're able to find royalties that our competition doesn't know about. We're able to find royalties in some instances that the owners of the royalty don't even know that they own the royalty. We actually have to spend time educating them and looking back through documents and records and proving to them that they own the royalty. What this gives us is first mover advantage. We're not only the first mover in jurisdictions like Australia and some in South America and some in Africa, just by being there first and talking to people first. We're also the first mover because we're finding the royalties that many just don't even know exist. This is allowing us to be in front of more opportunities, be the only party at the table typically looking to buy these royalties, and then allowing us to transact at very fair value. So it's not just about growth for VOX, it's about growth at great value, and that is an anomaly in the royalty space, and frankly, in most sectors. An example of this is a royalty portfolio that we acquired from Trafigura subsidiaries Nearstar and Breakwater. We were able to purchase royalties that cover 10 million ounces of gold equivalent resource for under $1 million Canadian. We were able to find royalties that are in the development stage that will be coming into production over the next few years at a huge discount to the value of these assets. We continue to find these opportunities and bring these opportunities in volume into our portfolio for our investors. One of the big tools that allows us to accomplish this for our investors is we purchased a database from a company called Mineral Royalties Online. Almost a decade ago, the two founders of this business started accumulating data and information over royalties all around the world. They had worked for the majors and knew where royalties were lost and buried and not known about, and started taking physical hard data, converting that to digital, and creating basically a complete database that shows you where the royalties are they covering the reserve or the resource, and who those owners of those royalties are. We've been able to high grade or cherry pick the quality royalties in this database, and we've been doing this consistently now for approaching 2 years. This database also supplemented the intellectual property we had been building long before this. And this combination, bringing in two very sophisticated individuals, along with this intellectual property and the deal sourcing agents that we had around the world, have given VOX a huge advantage over competition in terms of finding great royalties and bringing those into the portfolio. As mentioned earlier, we have more than 35 different operating partners. It's critical to understand as an investor that diversification when it comes to mining is key. It obviously diversifies against risk. We don't lose sleep at night if any one of our projects were to have a problem, because we have 45, approaching 50 royalties with 35 different operating partners, which means we're not overly exposed to any one asset having problems. But what we're finding is this diversification in what has been a commodity bull cycle, especially with our gold assets in Australia, now for more than 3 years, is that the assets that we bought royalties over are outperforming expectations, and they're moving faster on their development curve than expected. This faster growth is meaning that our portfolio is accumulating value even faster than we expected, and we were cherry-picking high-quality assets. So what we're seeing is unforecasted upside in our portfolio, and that continues to bear fruit for our investors. And the thing that's critical about that is we're not paying $1 more for those advances that the operating partners are making over these assets. When they spend money to drill for further ounces and reserves or tonnage that's going to be future revenue for us as the royalty company, we're not paying any additional dollars for that. And that revenue interest, that top-line revenue interest, is not diluted. And that's really what provides the leverage for our investors with our royalty portfolio. It's also critical to understand that VOX is very undervalued versus the other peers that operate in the royalty industry. In fact, we're undervalued versus some of the companies that started, frankly, far after us. They chase growth at very expensive value. That being said, it well rewarded their shareholders. VOX is discounted right now. We're a very relatively unknown story, but we're building a company the right way with the right principles in place and a better foundation than almost any royalty company has gone public with IP and competitive advantages. We're excited about what we have in front of us. We have both the inherent organic growth that we're creating and also trading at a discount to our peers. Our growth is going to continue, and we expect a re-rating also to occur that brings us valued in line with our peers. VOX has been consistent about achieving and doing what it says it's going to do as a publicly traded business for our shareholders. We focus on these relationships. We focus on these results. We have done what we said we were going to do in each quarter, in each year, and we're going to continue to do that. VOX is extremely catalyst-rich in 2021. We delivered tremendous growth in 2020. I believe we're going to eclipse that growth in 2021. We're also going to see the benefit of the assets that are already in the portfolio, speeding up their development timelines and achieving their catalysts that essentially are a tidal wave of news that VOX taps into when we see our operating partners developing those assets and improving the value of those assets. Those come to our shareholders for free. So not only will you see the growth from VOX in terms of acquiring new royalties, you're now going to see the leverage from having more than 45 royalties in the portfolio over disparate projects that are increasing in value every single day. VOX is also looking at other measures to increase liquidity and awareness and price. We'll be announcing likely a secondary exchange listing in mid-next year. The U.S. is what we're targeting right now. That's going to significantly increase our visibility and the liquidity in our stock. So in summary, in terms of the presentation, we're very excited about 2021. When you look at VOX, we have significant competitive advantages that are going to continue to drive our growth. We have a very high-quality asset portfolio right now that's going to give you, the investor, better risk-adjusted returns in the commodity space by owning the fastest-growing royalty company on the planet. So with that, I'm going to hand it over to Q&A and start taking questions. If you have any questions, please feel free to log in and get those questions, and I will do my best to answer them. So without further ado, I will jump in to the questions. There are two questions regarding, actually 3 questions regarding U.S. listings. As I just mentioned, the plan is to go after a U.S. listing. We are commencing the early stages of that process now. We would expect to have an announcement in that regard, if not sooner, but by mid-next year. But the U.S. exchanges, probably the NYSE American is the exchange that we're targeting, and we believe that will have a significant positive effect for our shareholders and the liquidity and interest in our business. Going to the next question, what separates VOX from other mining investments? You know, I think a lot of the presentation was focused on what separates royalty companies. Royalty companies offer better risk-adjusted returns in the market than other commodity-based investment opportunities. VOX is distilling those qualities of royalty company and really accentuating those for our shareholders. We believe royalty companies are the better way to get commodity exposure. We believe VOX is the best way to get royalty exposure as well. And we're continuing to deliver fantastic results for our shareholders and fantastic organic growth that's set to continue. The last question, what are the key value drivers in 2021? Right now, we are experiencing exponential growth in the revenue category. We now have 3 operations that are delivering revenue to the business. We expect that to be closing in on 8 or 9 as we exit 2021. You're finding VOX at maybe what might be the most interesting point in our development cycle as a business in terms of delivering the tangible, very concrete, very explosive growth for our shareholders. And we're very excited about what 2021 holds. We'll be complementing that fundamental growth with fundamental growth in terms of total royalties acquired, production stage royalties, and royalties generating revenue for our business. Companies that have done that in the royalty space have performed exceedingly well compared to almost any benchmark that you can compare them to. So we're excited for our investors and what 2021 holds for VOX Royalty Corp. That is the conclusion. There are no further questions. Sorry, there is one last question that I'll go ahead and answer. It says, what are your current focus in terms of metal types, and would you expect that to change in the next couple of years? Our current focus is precious metals. That being said, we continue to find great royalties in hard rock assets. You would note that we acquired a vanadium royalty over one of the highest grade vanadium projects on the planet. We are looking at great copper royalties. So while precious metals will always dominate the portfolio, and some of that's organic because there's frankly just more precious metal royalties out there, we will continue to swoop up great royalties at great value, even in non-precious categories, because we believe at the end of the day, those royalties are going to present explosive growth for our investors. So that's a little bit of insight into how we look at the royalty world specific to different commodities. So thank you again for everyone's time. It's a pleasure to be with you. Happy New Year, and please feel free to get in touch with us via our website and ask any further questions you may have via that form. Thank you so much.
And that concludes this webcast. Thank you.